All right. So, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender specializing in non QM loans. And what we do every morning on this show is go through our live mortgage rates, and then we do a deep dive into a different loan topic.
And get into one of our most popular topics here, vacation rental loans, short-term rental loans, however you want to word it. Airbnb, obviously the latest craze for the last few years, especially over the pandemic. The purchases of these has rocketed, and our investors are always looking for great ways to finance them. So their DSCR option obviously is the preferred vehicle for a vacation rental type home. But there are some specific options, as I mentioned when we do the DSCR examples, where we can use different income calculations. Jose will have a couple examples here, probably using regular income type, similar to what we do in the demo. But then we have some specific programs where we can actually use that income if we need it. So, Jose, let's check out some options for these vacation rental, short-term rental, aka Airbnb properties.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. We definitely love our DSCR programs because of the flexibility that the guidelines for this program allows for different income streams. So in this case, the income stream that we are talking about is our short-term rental properties. Right. So short-term rental properties, the main thing to note is if it's a purchase, much easier process than if it is a refinance. As if it is a purchase, you can use estimated income figures like through AirDNA versus if it is a refi, you cannot use AirDNA, but you can use the revenue reports that are generated. The main issue that we're facing when dealing with these properties on a refi is the fact that there usually is not a long-term lease in place, right? So theoretically, you don't even have a month-to-month lease. You have usually no lease, so the place could appear depending on the guidelines that you're using, to be a vacant property. And in some cases, if it's a vacant property, it's going to be subject to either an LTV reduction or possibly, depending on the guidelines, not being able to do the loan at all. So it's very important to review all those guidelines and make sure that they cover the needs, which in this case are going to be short-term rental properties. The great benefit is that being able to use these alternative income calculation methods does allow us to meet higher debt service coverage ratios, which, when using short-term rental income calculation methods like AirDNA, for example, the option I'm going to show you today that does allow you to use AirDNA for calculating short-term rental income, does require at least a 1.5 debt service coverage ratio to be able to qualify. So with that being said, let me go ahead and share my options with you today. My first option is that unicorn, the 15% down DSCR program option. However, this 15% down option does not allow using short-term rental income to qualify. At the 85% LTV, it does require using long-term rents only, and the long-term rent has to be at least, the DSCR, debt service coverage ratio, has to be at least 1.2. So in our example here, 15% down short-term rental property, we're looking at 10.375 being our lowest cost option, 9.75 being our lowest rate option, for our maximum 85% LTV DSCR for short-term rental property. Now, this next option does allow for the use of AirDNA for this one unit property, 20% down. Again, like I mentioned, minimum of a 1.5 debt service coverage ratio when using AirDNA comps, and this is for purchases only. Great rates here. We do see 7.875 is our lowest cost option. Actually has a little bit of a lender credit. And you can buy that down all the way down to the amazing 6.75% for this 20% down option using AirDNA comps. And remember, AirDNA comps are AirDNA is a database that has short-term rental comps. So now our 20% down option using long-term rents. Again, 7.875 lowest cost option, a little bit of a lender credit there, buy it down to 6.875. And this is using long-term rents to qualify, not AirDNA. And then in our next option here, we're using the revenue reports that are generated by the different short-term rental platforms. It could be from buying them. Obviously, if you have it on more than one platform, we're looking at Airbnb, HomeAway, VRBO, Booking.com, to name 4 examples of the revenue reports that would be provided. And we can also, for this program, accept bank statements if the bank statements clearly show the deposit is a short-term rental deposit. And we're looking at 8.125 being our lowest cost option. And you can buy that down to 7.25 for this option using revenue reports to qualify the last 12 months revenue reports for the refinance or purchase, actually, because this is for a property where the seller would be operating the property as a short-term rental, and the seller is also collaborating and offering either the revenue reports or the bank statements to show the income generated by the property. Now, a little bit more of a creative approach here. For the short-term rental property where you do not have revenue reports available from the owner because they may not be operating it as a short-term rental, or maybe they don't want to share the information, maybe they don't have complete information, right? Well, this is a good option when the long-term rents also do not allow the property to qualify. We can, on a 1.0 or greater DSCR, we do have the option below 1.0 DSCR. This is when the debt service coverage ratio covers the housing expense anywhere from 75 to 99%. You're still not covering on a 1.0 basis. Maximum LTV here is 75%. So this is a 25% down option. And you're looking at 9.125 lowest cost option, 8.125 lowest rate option. Great program for those trophy properties that you know they're going to make money as a short-term rent, but unfortunately not operated as a short-term rent right now, or short-term rental comps are not available in AirDNA. So now we have our below 0.75 no ratio DSCR for when your DSCR is below 0.75, not even covering 75% of the housing expense. 25% down option. 9% is our lowest cost option. 8.625 is our lowest rate option. And now let's go with some cash out options for you. Here is at our maximum 75% LTV cash out using long-term rents or revenue reports, either or. And we have some great options for you here. 8.125 actually has a little bit of a lender credit as our lowest cost option. And you can buy that down all the way to 6.875. Wow. For our cash out, 75% LTV for our short-term rental property using long-term rents or also using revenue reports, short-term rental revenue reports. And now this is our low ratio DSCR cash out. Now this one again, we are at 0.75 to 0.99 on the DSCR. This one is 70%, 70% maximum LTV as opposed to 75%. And we got a little mistake here. 9% is our lowest cost option, and 8% is our lowest rate option. Excuse me, 7.875. We had a little bit of a mess up here in our calculations. And now our no ratio DSCR cash out refi. This one is only up to 65% LTV maximum. This is using long-term rents. Again, this is our no ratio where the debt service coverage ratio is less than 0.75. So 65% maximum LTV, and we're looking at 8.5% is our lowest cost option. 8.125% is our lowest rate option. For our last example here, for our short-term rental, no ratio DSCR cash out, where the DSCR is less than 0.75. So many great ways here to finance your vacation rental for your purchase or your vacation rental for a cash out refinance. All of them using our flagship DSCR program, in some cases allowing for the use of AirDNA comps, allowing for the use of revenue reports, bank statements, or long-term rents, and low ratio and no ratio options.
All right. I don't see any questions. Definitely great options there and a lot of opportunity out there for both investors and loan officers to take advantage of. All right. I think we can go ahead and wrap it up then. Appreciate everybody tuning in. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then we do a deep dive into a different topic. So we'll be back tomorrow with a new topic. Thank you, everybody, for tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.